Hi candidates, welcome to another session of Manifested Online Classes. We are still continuing with our syllabus coverage, and in this particular session, I want us to look on one of the subtopic in topic number 3, and the subtopic is financial reporting in hyperinflationary economies. So what do you mean by hyperinflationary economies? When talk about these economies, there are those particular economies generally whereby the inflation rates or basically the cumulative inflation rates for a period of 3 years is approaching 100% or actually exceeds 100%. And therefore, entities or companies which operate in such type of an inflation, or basically in such an economy, that is, in such an economy, then they are required to prepare their financial statement in accordance with the International Accounting Standard number 29, which requires that those financial statements must be adjusted in order to reflect the changes in the general purchasing power of the fractional currency. When talk about the fractional currency, basically we are talking of the currency or the local currency of the primary economic environment in which now an entity is operating. So if an entity is operating in Kenya, then we say that the fractional currency is the Kenyan shilling. So therefore, this particular standard here, that is International Accounting Standard number 29, it basically establishes the guidelines for financial reporting by entities operating in what? The hyperinflationary economy. So we can say that IAS 29 establishes the guidelines for financial reporting by entities operating in hyperinflationary economy, hyperinflationary economy, or basically hyperinflation economy. So meaning that the main objective of International Accounting Standard number 29 is to establish guidelines to be followed by entities or basically by companies operating in hyperinflationary economies when preparing their financial statements. And therefore, IAS 29 here we can say it ensures that entities operating in hyperinflationary economies then provide financial information that is reliable, relevant, and also what? Comparable. So therefore you can say that IAS 29 ensures that entities operating in such economies provide financial information that is reliable. Financial information that is reliable, number one. Also information which is relevant. Information which is relevant and also comparable. Comparable. Information which is comparable. That is the main objective of International Accounting Standard number 29, to ensure that financial information to be provided to the various stakeholders by companies operating in the hyperinflationary economies. That financial information is reliable, is relevant, and also what? Comparable, because this particular standard here requires that if a company is operating in an economy whereby the purchasing power of the fractional currency keep on fluctuating, then the financial statements prepared by such an entity must be what? Must be restated in order to reflect the current purchasing power of the functional currency. Therefore, once those financial statements have been restated, then you are saying that they will be relevant, they will be comparable, and also relevant to the various stakeholders when making the decisions. So in this case, there are some key terms we need to define here, which I've already mentioned. We need to define what is hyperinflationary economy, and also there is another term we have mentioned here about the fractional currency. So let's look on those key definitions. Definitions. The first term here we need to define is hyperinflationary economy. Hyperinflationary economy. So in this case, when we talk about hyperinflationary economy, this is basically an economy whereby the cumulative inflation for a period of 3 years, or basically over a period of 3 years, is approaching or basically exceed 100%. So therefore, we can say that this is an economy where the cumulative inflation rates over a 3 years period, 3 years period is approaching or exceeds 100%. Is approaching or basically exceeds 100 what? Percent. The inflation rate over a 3 years period is approaching or basically exceeds 100%. So the other key term we also need to define here, number 2, is something we have mentioned here to do with the functional currency. The functional currency. The functional currency, basically, this is the local currency of the country in which an entity conducts its principal business activities. In other terms, we can say that the functional currency is what? Is the currency of the primary economic environment in which the entity do what? Operate. So therefore, this is the currency of primary economic environment, in which an entity operates. Basically, what that means is that if, for example, a company is operating in Kenya, then we can say that its functional currency will be the Kenyan shillings, shillings, because it is a currency of the primary economic environment in which an entity is operating. In other terms, we can say that this is the currency of the country whereby the entity conduct its principal business activities. It is what? It is the currency of the country in which an entity conduct its principal business activities. So that is the definition of the term what? Functional currency. So therefore, these are basically some of the terms which you must be in a position to do what? To define. And therefore, what you have said is that International Accounting Standard number 29 requires that a company which is operating in hyperinflation economy should do what? Should restate the financial statements to reflect the changes in the general purchasing power of the functional currency. So if the inflation, or if a company is operating in an economy whereby the cumulative inflation rate over a period of 3 years is approaching or exceed 100%, then the financial statements which have been prepared at the end of the year must be restated. If, for example, a company had acquired an asset maybe 2 years ago, and the cost of that asset was 2 million, due to the inflation rate or due to high inflation rate, automatically the cost of that particular asset cannot be 2 million. So therefore, what this particular standard requires is that that asset which was bought at a cost of 2 million its value must be restated to reflect the current market value of the same of the same asset today. And in terms of how the company should do that, the company is guided by this particular standard here, that is International Accounting Standard number 29. Then from there we can proceed and look on the key requirements of this particular standard as far as the restatement of financial statements is concerned, and other issues as far as this standard is concerned. So therefore, let's look on the key requirements. Key requirements of International Accounting Standard number 29. Number 29, we are going to look on a number of requirements, or basically a number of provisions as far as International Accounting Standard number 29 is concerned. And we can start by looking on the issue to do with the restatement of financial statements. Restatement of financial statement. Remember, what we have said is that any company which is operating in hyperinflation economy must restate its financial statements at the end of the year, and this restatement is done for those financial statements to do what? To reflect the changes in the general purchasing power of the functional currency. So therefore, we can say financial statements of entities operating in hyperinflationary economy must be restated to reflect the current purchasing power of a functional currency, functional currency. So that is one of the requirements under IAS 29 as far as the restatement of financial statements by entities, or basically by companies operating in hyperinflationary economy is what is concerned. On the other hand, the restatement, or this particular restatement, involves adjusting the historical cost of the financial statement using a suitable price index. Using a suitable price index in order to reflect the value of money. And in this case, I've given a good example here. If a company had acquired an asset 2 years back at a cost of 2 million and the inflation is too high, you may see a scenario whereby the current price of such an asset is maybe something like 10 million. So therefore here, this particular standard requires the company to restate the cost of that particular asset in order to reflect the current value of that particular asset. So that value must be restated, for example, to an amount of 2 million, which is the current cost, the current value of such an asset. That's why we are saying this particular restatement entails doing what? Entails adjusting the historical cost. So we can say that this adjustment entails adjusting entails adjusting the financial statement. We have said that the financial statement must be adjusted using a suitable IDEX, to reflect the changes in money value, So that particular adjustment entails adjusting the financial statement using a suitable IDEX in order to reflect the current market value of such particular items, or basically, yes, of such items. So therefore, that is the requirement of International Accounting Standard number 29 as far as the restatement of financial statements of entities operating in hyperinflationary economy is concerned. So I want us to proceed and look on the other key requirements under IAS 29. So number two, we also have, or basically number two, this particular standard here talk of what we refer as the selection of something called the reporting currency. Selection of reporting currency. So when talk about the reporting currency, in other terms, we refer to this as a presentation currency. This is basically the currency which is used by entities in preparing their books of account and also preparing their financial statement. And according to the International Accounting Standard number 29, entities are required to select a reporting currency that reflect the economic environment and also provide meaningful information to the users. So therefore, that is the requirement of IAS 29 as far as the selection of the reporting currency is concerned. We have said that entities must do what? Must select a reporting currency. Entities must select a reporting currency. Remember, in this case, we are saying a reporting currency is the presentation currency, is a currency used by entities in terms of doing what? In terms of preparing their financial statement. So therefore, we are saying entities must do what? Select a reporting currency that reflect the economic economic environment and also which will provide information which is actually meaningful and provide meaningful information and provide meaningful information to the users of financial statement, So therefore, the currency which is used by entities to prepare their financial statement must reflect the economic environment in which an entity is operating and also provide meaningful information to the users of the said financial statement. And on the other hand, we can say that the reporting currency could be the fractional currency, could be the local currency the local currency of the primary economic environment in which an entity is operating, or a stable foreign currency. For example, if an entity is operating in hyperinflation economy, such an entity may decide to prepare its financial statement using or to prepare its financial statement using the US dollar. Instead of using now the local currency, then such an entity may prepare its financial statement using a foreign currency which is a little bit stable, stable. So that's why we are saying that this particular reporting currency can either be a fractional currency. The reporting currency can be the fractional currency, or any other stable foreign currency, So when talk about a stable foreign currency, this is a foreign currency whose value do not keep on fluctuating, maybe due to inflation. Due to what? To inflation. So therefore, this is basically the other requirements under IAS 29, that whenever entities are selecting the account, the fractional currency, or the not the fractional, rather the reporting currency, they must select a reporting currency that will reflect the economic environment and also provide meaningful information out to the users of the financial statement. We are saying that reporting currency to be used by an entity in preparing its financial statement can be the fractional currency. Remember, you have defined what is a fractional currency there, or any other stable foreign currency. Any other stable foreign currency, which we can say here an organization may decide to prepare its financial statement using a currency like sterling pound, maybe something like US dollar, a currency which is stable. Its value do not fluctuate widely due to what? Due to inflation. Due to what? Due to inflation. Yes, so I think that is the other requirement under IAS 29. Finally, I want us to look on the disclosure requirement. Under International Accounting Standard number 29. So here we are talking of the information to be disclosed by entities as far as the International Accounting Standard number 29 is concerned. Here, companies are required to disclose a number of, or basically required to disclose the following details. Number one is any gain on monetary items. So during the translation of the financial statement of entities operating in the hyperinflationary economy, that may give rise to a gain or a loss. So that gain on that is gain on monetary items need to be disclosed. So the other information which also need to be disclosed is the fact, or the company also need to disclose the fact that financial statement of prior period, when talk about prior, we are talking of the previous period. Prior periods have been restated. Of prior periods have been restated. So the other information which also need to be disclosed is whether the financial statements are based on the historical or current cost approach. So entities operating in hyperinflationary economy are required to disclose the fact as to whether the financial statements which have been prepared are based on what? The historical or the current cost approach. And finally, entities are also required to disclose the identity and level of a price index, identity and level of a price IDEX on the balance sheet date. The balance sheet what? Date. So basically these are some of the information which need to be disclosed by entities which are operating in what is referred as hyperinflationary economy. So I think basically that what you need to know as far as IAS 29 is concerned. Before we wind up, I want to give an assignment here. Question 1 needs explain the scope of IAS 29 into bracket financial reporting in hyperinflationary economies. Question 2, highlight the disclosure requirements under IAS 29. So that is today's assignment, and that brings us to the end of today's session. So see you in the next session.